As potentially the largest consumer market in the world, every company presumably has got to have interest in the Chinese consumer market. And that's very central to the 12th five-year plan, the latest plan produced by the Chinese government. What's the significance of that planning? We're talking to Terence, HKTDC's China business advisor. So Terence, really looking at the market there in China, looking at the consumer market and the relationship between that and the 12th five-year plan. What is that? Does one produce the other? Does one encourage the other?
China started their open door policy in 1979. Over the past 30 years, Chinese economy, they emphasize on investment, on exporting. Well, to a certain extent, they clearly care about the consumptions. But in the 12th five-year plan, which is started in this year, the Chinese government realized that they want to rebalance their economy. That means put the consumption into higher positions than before. And on the other hand, one of the main things of the 12th five-year plan is to improve the quality of living for the Chinese people. All this make the Chinese government, they want to put consumptions into a higher positions in their economic growth. So under these major principles, actually the Chinese government, they have to do something in this year. Like, for example, the local government of different provinces has already raised their minimum wages rate by 20%. On the other hand, the Chinese government has already amended their personal income tax law. Starting from September of 2011, the personal income tax exemption level will be raised from 2,000 to 3,500, which is quite significant, a significant rise on that.
So there seems to be a big difference between the top and bottom of the consumer market. If you're a foreign company, which one do you really go for?
We must understand that China is one of the major production bases in the world. Many consumer goods they can produce by their own. But for design, for taste, the quality has been improved. But when we're talking about taste, when we're talking about style, well, this is a gap between the Chinese produced goods and the world brand goods. So when we sell in China, like for those basic goods, the comparative there is keen. But especially when you come to Hong Kong, you can see that there's thousands and thousands of Chinese tourists coming to Hong Kong to buy. They buy international brands, they buy goods with style, with designed goods. So we need to understand that. So if you are going to sell those basic items today, it is not easy.
So one would assume that if you're a Chinese consumer, then you are going to accept foreign goods if they're branded.
For entering into the China market, price strategy. That means your comparative edge is basically on price. It is hard because the Chinese factories, they can produce even cheaper than you. So when you compete with price, it is hard for you to be up the market there. But the Chinese customers today, they demand quality goods. They demand branded goods. So we can make use of this.
So we've talked about the products, but what about setting up a sales office? And do you need permission to set up a sales office?
After China joining the WTO, well, China has already liberalized their retailing sector, trading sector. Today, setting up a retailing company in China is not that difficult. There's a general company registration procedures. What you need is just go through this. But if you are going to involve in some special product like food and beverages or cosmetics, because that type of product, you need to apply some special license from the government department. Other than that, just normal company registration procedures.
Hong Kong, of course, has the Closer Economic Partnership Arrangement, or CEPA, with the Chinese mainland. But how important do you think it is for foreign companies to make use of that arrangement in order to sell goods or services on the Chinese mainland?
Under CEPA, well, for goods making in Hong Kong, that means fulfilling the country of origin of Hong Kong, those goods, when we export to China, they are exempted from paying the tariff in China. On the other hand, under CEPA, Hong Kong servicing companies, they can go into China with lower entry level. When foreign companies come into Hong Kong, they set up companies here or factories here. If the goods made in Hong Kong fulfill the requirements, then those goods can export to China with lower costs. That means they can exempt from paying the tariff. And on the other hand, if the service company come to Hong Kong for 3 years, after 3 years fulfill the requirement of CEPA, they can go to China as a local Hong Kong companies to set up their service companies there with lower entry requirement there.